Hello, friends. My name is Renzo, and welcome to our new and improved YouTube channel, TF3 or Task Force Financial Freedom. The reason why we started this channel is because my wife and I have been approached by family members and friends who want to start investing and trading in the stock market. My wife and I have been doing this for a little bit, for a couple years now, and we have a very diverse portfolio. So we just want to share what we know with you guys. However, you have to consider, like the disclaimer says, that trading or investing in the stock market can have very nice rewards, but it can also be very risky. So before we move forward, I want to tell everyone that before you start putting money, your own money in the stock market, you need to practice. You need to have a paper trading account, a training account, a fake account, however you want to call it. So that training account, that paper trading account, is going to allow you to invest fake money in the stock market, but at the same time, it's going to allow you to learn from your own mistakes and from your success, so you can take note of what's working for you and what's not working for you, so you can redefine your own strategy. And I said your own strategy because once you get to that point, it is very important that you follow your own knowledge and not what anybody tells you to do. I have made the mistake of following whatever gurus or chat rooms were saying, and I don't know if they were doing it on purpose or whatnot, but when they were making money, I was losing money because I was just following what somebody else was saying. So we're at the point, my wife and I, that we have our own strategy and we're sticking to it. Okay, so my first question is this. You want to start in the stock market, and that's why you're watching this video. Do you understand what the stock market is, how it works, and what companies and what futures or indices you want to invest your money? Do you want to invest or do you want to trade? There's a difference. Do you understand the implications with taxes? All of that you need to know before you start in the stock market. Okay, so let me give you the definition of the stock market. Boom, it's right in front of you. What is the stock market? Like it says in the name, like the name says, it's a market. So it's a market, a place where most of the companies, major companies, medium companies, small companies, put the shares so investors can go and buy them, invest in the companies, or buy them and sell them. So they trade the shares of the specific companies in this market. Okay, so there are different, I'm going to say markets, but there are indices in the stock market, in the big overall market. The ones that I like to trade are called the S&P 500, okay, which is a pool of the best 500 companies that are in this market, and also the Nasdaq. The Nasdaq is another group or another market, another pool where all the companies put their shares, so investors can go and trade them or invest in the companies. Okay, so here, let me show you how you can take a quick look at the markets. Okay, this is Google Finance, and you can just Google Finance, and it's going to give you this chart right here. Okay, so as you see, we have the Dow Jones. This is one of the different markets or the indices that you can trade. The S&P 500, the Nasdaq, Russell 2000s, and the VIX. Okay, so we're going to concentrate today on the S&P, Nasdaq, Russell, and VIX. S&P 500. The S&P 500 stands for the Standard and Poor 500. Okay, let's go to this other tab right here. What does that mean? There are 500 big companies or companies that put all of their stock, all the shares in this market so people can go and buy them. So let's take a look at some of the companies. The companies here are some of the companies that you probably have heard of or you probably know and you buy products from. So 3M is known for making the N95 mask, and they also used to make the hearing protection for the army until they find out that it was defective, and now I think the army or previous soldiers are suing them. But nevertheless, they make products, 3M. We have Abbott Laboratories. They were working also on the early stages of the vaccine for the coronavirus. You have Activision Blizzard. They make I think they make video cards. I think that's what they call, or sound cards for video games. You have Adobe for computers, Aflac. Okay, so if you just Google S&P 500 companies, it's gonna give you a list of the companies that are traded in the S&P. Okay, now let's take a look at the Nasdaq. The Nasdaq is a group also of companies that share or trade their stocks in this group. So some of them are going to be similar. So you have Activision Blizzard, AMD, okay, Adobe. We saw Adobe previously. We have Amazon, we have Apple. So why is this important? Because if you're going to trade, let's say Apple, right? Are you going to look at the or consider to look at the S&P 500 chart or the Nasdaq chart? Well, that's up to you, or just simply the Apple chart. Okay, so that's a later lesson, but you need to understand the two or the three different markets or indices. Like I said before, we're going to concentrate on the S&P 500, the Nasdaq, the Russell, and the VIX. Okay, so let's click here on the S&P 500. This chart right here represents, if you look at the 1D, that means 1 day. So this is the price action for 1 day. So from morning open, 9:30, 10 o'clock, 11. So you see the market open. This is Friday, the last trading day. And around 10 o'clock, 10:30, it dropped and then it went back up by 11 o'clock. And then it was kind of sideways and then it went down and up again. If you click 5D, that's how you read these charts. This is the price action for the last five trading days. If you see also it's red because that means that in the overall um, uh, in the overview for the last five trading days, the price went down. If you look at 1M, that means 1 month, and it's green because for the 1 month of February, the price action was positive or it continued to go up. 6 months, okay. So what are we doing right here? Why are we looking at this big chart? Because, like I said before, do you want to trade or do you want to invest? If you want to invest, you're looking at medium to long term. That means anywhere from a week to maybe 10 years. So you need to understand if the price is going to go up, if it's continuing to go up, even if it has a dip right over here, have a dip and you buy more and then let it ride for a couple years, it dips again, you buy some more and you let it ride. Okay, but if you're gonna trade, that means that you're probably going for 1 day, maybe 1 hour, maybe 10 minutes, and you just want to catch on the 1 day, you just want to catch this little, this tiny ups and downs. But this tiny ups and downs can give you a lot of money too. So the reason I'm showing you the big picture to the small picture is because you need to understand, once you get to that point, do you want to invest or do you want to trade? Okay, now let's look at the Nasdaq. Nasdaq gives you the same scenario analysis. Okay, you can see that 5 days the price was going down. 1 month, it was actually the Nasdaq for the 1 month was in the red. It's be considered to be the price going down, but overall for the last 6 months or 1 year, the price is coming back up. So for me, if I was to invest in this, I will wait until I see an opportunity to buy when the price goes a little lower and buy some more at a better price and let it come back up, because the overall trend, this is the trend, is positive. Okay, the Russell 2000 is, if I'm not mistaken, where most of your penny stocks or your small cap stocks are traded. So what is a penny stock? A penny stock, before, it was considered anything less than $1. So any company that traded shares of the company and those shares were valued at less than $1. So now penny stocks can be anything from $10 and down. Okay, so those are your small cap stocks. So why is this also important? Because If you don't have money to invest in big companies like Apple, that where the stock price is $210 or something like that, but maybe you have enough money to invest in a company that you have to pay only $2 for the shares. So you have $100, you have money to invest in a $2 stock versus a $250 stock. Okay, so again, do the analysis right here. And the VIX, it measures the volatility. So what this does is pretty much the inverse of the market. So if the market is going up, the VIX is going down. If the market is going down, the VIX goes up. So let's take a quick look. Okay, S&P 500 for one day. If you see, the market opened and it went down until 10:35. Okay, now let's look at the VIX. The market opened, but the VIX went up and then went down. So it's the inverse of this. Now, why am I showing you this? Because look at the difference in price. $27.95, $3,811. So if you don't have money to invest in the S&P, right, you could probably invest in the VIX. All you have to do is watch and monitor what one is doing, and the other one is gonna be doing the inverse. Okay, let's not get ahead of what we're learning today, but this is part of the technical and fundamental analysis that we are going to have to learn in order to start trading or investing in the stock market. Okay, so now let me show you my chart. Don't worry about this. I know it looks busy, but there's more videos coming up where I show you how to set up your charts, where to get your charts from, how to open an account, how much money to put in an account, how much money not to put in an account or to invest, and how to set this up the way I have it. Okay, so on the left side, I have the S&P 500. Okay, the symbol for the S&P 500 on this platform is /ES. This platform is called Thinkorswim, and the broker or the company that provides this is TD Ameritrade. Now, why do I have to have a broker and a platform? Because in order to buy or sell or trade stocks or shares, you need to have a broker that provides those shares and buys them and sell them for you. You can do it directly from the companies, but it takes too much time. There's a lot of paperwork involved, and if you want to trade for 1 day or 2 days, that might not be beneficial for you. Okay, going back to this. On the right, we have /NQ, and that is the symbol for the Nasdaq. Okay. This platform right here is showing me the price action for the last, let's see, the last 3 years. And every one of these candles or these lines right here represents 1 day. So for the last 3 days, you see that even though there was some dips in the market continued to go up. Now it's on a reverse right here. It's going down. It could potentially bounce at this area and continue to go up. But if it doesn't, then we might have a big drop or a medium drop, which it might not be too bad because the markets need to correct themselves sometimes in order to grow some more. Okay, so here on the right, we have the same scenario for the Nasdaq. And why am I showing you this? Because you need to understand how to read charts in order to determine if you want to invest for long term, medium term, or if you want to trade for a day, for a couple hours, for a couple minutes, or a couple days. Okay, all right, guys, but that's it for today. Today was just mainly an overview of what the market is, the different types of markets, and the companies that are in each of them, and take a quick analysis or quick look of what we can expect when we start learning how to do technical analysis. Again, what we're trying to do here is share our experiences with you, and hopefully you learn something from us. And if you have something that you want to share with us too, please let us know, because in this channel we all grow together. Have a great night, and we'll see you later.